Welcome everyone to the Kendall Report. It is Monday evening. Had a big live stream earlier today. So thank you for everybody that came. There were, I think, over 4,000 people watching it at one stage or another. At least that's what's been watched so far. So I appreciate that. Before we get into tonight, keep me feeling welcome. Did a really good job. Hit that like button. Over 1,000, I think 1.2 thousand hit the like last night. That's a really good thing. So let's it's a free video, so hit the like. We get 10,000 views and get 1,000 likes. Let's try to get that up. So appreciate that. Subscribe and share these videos. Okay, so let's get into tonight. A couple things that happened yesterday is we just plummeted through the STX numbers. We actually got STX buy signals across the board, and we are seeing a little bit of a bounce. Right now, the Nasdaq is up 0.43, up 49 handles, and the S&P is bouncing just a little bit, up 10 handles. Nothing big. I don't expect any big rebound from here, but we did get pretty extreme yesterday after taking out 3809, which was the old May lows that went through there. They were non-existent. I talked about this last night, that I didn't think there was any reason to believe that there was going to be any kind of double bottom or any kind of interest in the markets here. A couple things I noticed in the afternoon, just looking at and reviewing what people were saying out there. No one's picking up, I don't think, what's really going on here. And maybe we'll find out a few days. The rest of them will catch up. But everybody's talking about that the sell-off in the bond market today was all due to expectations. All of a sudden, everybody's expecting the Fed to accelerate things, maybe because of Friday's CPI numbers, and maybe they're a little nervous coming into tomorrow's PPI. Well, I'll talk about that in a minute. But I really think the backstory here is the Japanese, and I'll show you some charts here tonight. I went through it a little bit, unfortunately, at the end of the video, so probably a lot of people never made it to the end. It was an hour-long video, so that I suspect that was the case. I'm not going to go on for an hour tonight. This is going to be a lot more brief and concise, and then we'll cover it again tomorrow night. But the Japanese story is a big one, and I believe that they came in selling bonds today. Once the yen went, the Dow yen went above 134, there was a lot of selling. The yen actually strengthened for about 3 hours, and it ended up closing flat. And I don't think they're going to be able to head off what's going to happen here. And I'll show you, I've got a couple of charts here that I'll show you tonight that I think are interesting. But more importantly, I talked about this in the live stream earlier, and I was just chatting with my buddy Hugh Hendry, and he was saying that this is more like 2008, and I was saying, no, this is worse than 2008, because 2008 was the debt crisis. So now we've added debt on top of debt on top of debt. Then you did fiscal spending, and now you've got inflation, massive debt, massive stimulation still in the system. And now everybody's worried about the Fed running off things faster. And it's kind of funny. I'll try to set this up, because I talked about this and try to get it a little more concise, and then we'll move on to the technicals here. But, think about what happened. I talked about this earlier. We had inflation come. It was going to be temporary. Then it wasn't temporary. Now it's more persistent. Then it was peaking, and now it's not peaking, okay? And the same thing with everything that's been going on here with the inflation story. That goes on, and that's going to continue to go on. Inflation's not going on. It's not peaking. The expectations, I'll just talk about PPI tomorrow, is coming in at 1% month over month, and the annual is expected around 11%. That comes in a little hotter. Maybe we've got another round of selling. A lot of this maybe is built into the markets, but I continue to believe that if the yen prints 137, you're going to see the Japanese panic. I don't care what the Fed thinks they're going to do. They are not driving this bus right now. The Japanese, and I said this earlier in the stream, I just want to emphasize, is that the Japanese are trying to defend their currency, which is plummeting, and they've got a lot of treasuries, so they're going to need to try to shore that up. They're buying JGBs, buying the Japanese bonds. They're trying to buy back things, stabilize, do all that stuff. And I said today that between the Japanese and the Chinese, they can absolutely destroy America right now. And Japanese are doing it to save themselves. The Chinese could show up and start selling just a little bit of treasuries and just take yields well over 4% so easily. It would be crazy. So there is a ton of risk in these markets right now, and certainly nothing's going to get fixed in the next couple of days. And it does flash me back to 2008, because '08 was a scenario. Once things got broken to a certain point, then there was no fixing it. Even when they did TARP and all of those things, it was, Lehman failed and they came in, there was TARP and everything that went on, and adding money in and doing QE. That didn't save it. There was another 6 months of declines after Lehman failed. So don't expect this to go away very quickly. And like I said earlier, this is really something we've never seen before. We've never seen debt accumulated at this level. Now we've never seen the QE that was so big. Now we're just starting QT, right? We haven't even started. Some of this is already priced in, but it depends on how much has to come out. And I mentioned, I'll just kind of summarize some of the things I said earlier today, is that the real situation that's happening here is that the Fed has no control over anything. There's not enough they can do. We'd have to have interest rates above probably around 12% on the 10-year, or I'm sorry, on the Fed funds, and that's not going to happen. They're not going to jack rates by 8%, 9%. They're not going to do that in one meeting. So they're going to continue to do this controlled liftoff, as they call it, right? So it's just going to be a cluster all the way, folks. There's nothing good going to come out of this. Doesn't mean we can't bounce here and get some good tradable rallies and stuff like that. It just means that there's going to be wave after wave after wave of these issues coming on. So let's go ahead and take a look at the database. There's some interesting things going on there. It really plummeted big time. So let's take a look at that. So the database has dropped down to 28.59% bullish. There were 6,057 sells, 90 buys. So this is one of those interesting scenarios that I was hoping that we would see more of the selling coming in today, but it's okay. We should get a little bounce here, and this is for tomorrow's opening. So a little higher opening. There should be some opportunity to sell into a little bit of strength or maybe some stability for a couple of days. But this is a big run here, and the ratio is really big on the upside. So you're looking at a really negative ratio, and what is that, 6,000 to 100? So it's kind of hard to even measure how negative this really is. So looking at the S&P, one of the things that I think is important to look at, I just talked about these numbers last night. There's some Fibonacci numbers here. Let me bring them up on screen. This is the daily futures. And what we're looking at is the number. Yesterday we printed down to 37.35 and the low target was 37.39. So we almost had a perfect hit on fib target 3, and that was pretty substantial. I'm going to bring up TradingView here for just a second. I just want to get this up here just so you can see this. This is the indicators here. You can see the same 3 moves down here into that target. There's another target here. It stopped calculating, and I'm going to draw this in because I want you to see. This is a little easier to see on this chart. I'm going to draw this in because this is your next level, and there's a couple things I'll point out here. Is one, these moving averages are just at a point where they've all converged, and we're starting to see a rollover. So we saw that up here. This is another level, but this is the pattern that's being calculated here. Let me clear out this so you can see just what I want you to see. So we're looking at this here being calculated as 1 and 3. That's what's coming down here. So we're looking at the potential here for the targets. I'm going to bring this up in a second, but these are really big numbers that are coming in here. And what they're suggesting is right here is low target 1, 34.36, 31.86, and 3,032. So I talked about a lot of numbers last night, and we're 38 to 36 looks like probably a hesitation point, not necessarily a bottom, but it looks like a point where we could hesitate at least at these levels here. And so this is serious. But if you look at the PPMs here, they are just spiked down. Minus, if we get over here, 1.0, minus 1.0, minus 0.21, and 0.39. So everything is in a downtrend mode. And typically what will happen, even if the market froze right here and started to go sideways, it would take anywhere from 5 to 8 sessions for the market to stabilize and probably set up a pattern that could maybe indicate there was going to be a, sustainable rally. And sustainable right now is 5 or 8 days right now on this daily chart. Let's go back to TradeStation. And this number here, what we're seeing is the PPMs are turning up, but they're down big numbers here. So this is, and that I didn't have the settings on the other indicator. So 0.90 is 0.90, 0.28, and 0.42. So these are all trend levels down. We're not going to see there's nothing good going to come out of this. Any rebounds, it's sell the rips and not buy the dips. Do not buy the dips. There might be a little short-term trade, but you're going to have to be really quick because there's so much selling pressure out there. There's so many people in trouble in the markets right now that it's going to be very difficult for you to trade these bounces. You're going to have to be, take half of your expectations if you get into these things. And be really careful, as we talked about in the live stream today. Be careful with these leverage, the TQs and the SQs, the triple bulls and the triple bear. Just be careful with those, especially on the Nasdaq. It could get pretty tricky here. But look at the range of expectations for today. Otherwise, for Tuesday, we're looking at R1 37.85. We printed up to 78, so we've almost done that. Maybe an R2 is possible. The volatility has expanded substantially. R2 is 38.21. That would be a pretty decent move from these levels. That's what, 50 handles? Very, very possible. Yesterday, everything was one-sided for the most part. There were a couple little bounces, but everything was met with heavy selling. There might be some opportunity for maybe a bit of a rebound and more sustainable for a couple hours. And possibly with the STX buy signal, we got it on all 3 of the indexes I'm going to cover tonight. We got it on the S&P 500, we got it on the Nasdaq, and on the Russel. I'll show you both of those when we come in. But basically, sideways range, typically on a STX buy signal, you might get an R1, R2. So that would be right here where I'm looking at now, 37.85. We've almost printed that already, but 38.21 would be the extreme. On the downside for today, 37.21 would be S1. That would probably be extreme. That would, if we got that, if we printed down to 37.21 and reversed and closed higher on the day, then we would have a little reversal. Maybe we can get a couple days of some sort of pattern that would indicate that there's maybe a little bounce here. I don't expect this to collapse and go straight down, but it's certainly possible, because if you think about it, we have PPI coming out, and if these numbers come in hot, and the producer price index has been much higher than the CPI, and there's a lag. PPI basically leads the CPI, and so we're seeing that lag in those numbers. So if we get a bigger number, then that just tells you we're looking at the next couple cycles of CPI, not peaking, but actually still accelerating. And maybe with some of the action that we saw yesterday, we saw the energy sector finally get some profit taking going on. We saw oil back off a little bit, but the point is that we're not going to get peak inflation here. And that's why I went through that setup in the beginning of the video, because everything that you're being told through the media, through the government sources, the words that are going to come out of Powell's mouth on Wednesday, all of these things are basically, they're trying to talk the markets into believing them. Jawboning is all they're doing. And they're trying, and this is an old tactic, been used forever. I've started, my first Fed chairman to watch was Paul Volcker. So I went through Volcker and Greenspan, and then ultimately Helicopter Ben and Grandma Yellen. And now we got, I don't know, Jay Powell. I don't know what to call this guy. So he's not a very strong individual, I can tell you that, and he's being guided by too many different things right now. And maybe his old boss, who is Janet Yellen over in the Treasury, maybe she's helping to influence this. And as far as I'm concerned, Yellen should be just fired on the spot, but that isn't going to happen. So, but anyway, this is what I'm expecting here. Let's go ahead and take a look at the Nasdaq. As I mentioned a minute ago, the Nasdaq also got that STX buy signal. It closed at 11,327. 11,469 was STX. So we got the buy. We're up, like I mentioned, we're up 62 handles. So it rallied 20 handles since I mentioned it just a couple of minutes ago. So we're looking at the potential 11,580 would be R2. And PPM's turning up. They're not material, down 1.03 on PPM 1, PPM 2, 0.34 and 0.56. So we're really not seeing any of those type of scenarios from the standpoint of any big reversal. But we are looking at a couple sideways days. We could stay firmly into the grid, which would be R3's 11,713. There's going to be a lot of emotion and folks stampeding in and out of these markets. Okay, so I want to look just for a second at the weekly pattern, because we actually printed down, I talked about this in the live stream earlier, that everything's seeking not the 200-day moving average, but the 200-week moving average. And where that is coming in right now is 10,812 on a weekly basis. S3, 11,196. We had a low 11,285 so far, so that's still out there. We traded between S2, S3, and STX is 10,998. If we get there, we'll probably go ahead and print through and go down to the 200 week from that point. Let's take a look at the RTY on a weekly basis. I'll keep that up there for a second. Same scenario here. We've already printed on the very first day of the week the extremes for the week. So possibility of maybe seeing some stability down here. 1676, the low 1706. 1705 was S3, so we printed S3 on the Russel on the futures. And we're at extremes already for the week. If it holds that volatility range, then we should see it actually maybe come back in just a little bit over the next couple of days. So looking at 1760 is the 200 days. So we're trading below the 200. I'm sorry, 200 week. We're trading below the 200 week average on the Russell. So the Russell has been in this really sideways range for most of the year. Now it's just starting to print into new lows. These are new lows for the year on all of the indexes here on Monday. And I do expect that we'll see this continue as we come through. All right, let's go to the 10-year next. We printed on a weekly 10-year. We printed above RTX. It's not the weekly close. It's Monday. It just had 1 day so far. And we're looking at the RTX being 3.36. We closed at 3.366. So we're just right at that number. This is the weekly. And what we're not seeing is the acceleration here. So the 10 is trying to round down, and we could see this thing come back in toward the lower end of the range, maybe back at 3. Let me get a number for you here. S1 right now is 311. So we could see a little bit of print back into 311, but we're seeing the acceleration on the PPM 2 and 3 on a weekly basis. Let's go over to the daily, just look at the short-term patterns. Interesting enough, we've got a cycle coming in today. Actually, tomorrow, this is probably going to be maybe a cycle high again. So maybe we print this out. Maybe this inflation number comes in. We'll see if we get a spike high. But look at the acceleration here on PPM 1 and 2, just accelerating here. I talked about this the other day. On 6/1, we got the breakout. PPM 1 actually gave a signal, confirmation signal over here for PPM 2. Not sure why this platform's doing this, but that came in a few days later, and now we're in this acceleration. We'll see if we see what comes out of this cycle. I'll cover this tomorrow when we come in here, and we'll see how everything sets up on here. But here's the big story, and I talked about this. I'm kind of repeating a lot of things I covered, but this is the yield curve here, and what we're looking at is all of a sudden we're inverted again. And we're going to have to watch this real close. I mentioned this earlier. Look for if we stay inverted at least 3 weeks, I'd say to the end of the month, maybe into July. If we stay negative, we're going to see that ultimate signal for the recession will be there. And typically that's another 12 months out. I think we could see that the market starts to tap out here from a yield standpoint. We're up at 3.6, if we did get this crazy selling I talked about, I'm going to bring up the yen next, and we'll go through that next. But the point is that we're going to see some ceiling here, somewhere between right here at 3.33 and 3.40 is going to be the peak at the moment. Let's take a look at let's go to the yen here. Thought I already had it up. I had everything set up. Bear with me 1 second. It's probably on another browser. There we go. It is. All right. So this chart here is the yen, but it's the quarterly chart. And so this goes back to 1994. You can see, and this pattern that you see right here, we're looking at 149, 168, 180. That would be a disaster for everyone. But I want to draw this in again because this is the pattern that the price projection tool or the Fibonacci tool is picking up here. It's picking up basically this pattern here. That's here. But this is, even though we haven't never taken out this low, so we haven't negated this pattern, this is still a valid pattern. So 149 is, let me get the exact number. This screen gets frozen when I do that. Just remember that pattern. So right here, this number here is at 149. It was the right number. So let's back off this a little bit. Let's go to monthly, and you start to see this pattern unfold. There's even a bigger pattern that's out there. You know, if this happens, if we went to 149, that would be a disaster. And I believe what will happen during this time, if that were to happen on the yen and it continues to that level, the PPMs that I have here, this is the monthly, are vertical. And this suggests that, you know, we're a long ways from a top in the Dow or yen. And if it did go to 149, that would be disastrous. The Japanese are going to sell treasuries all the way up. They're going to try to defend their currency. They have no choice. And this is what I was talking about earlier. The Bank of Japan experiment going back to 1990, doing 30 some years of QE, is now coming to an end. And I think the answer is becoming clear. It failed. And now they're trying to defend the currency because it finally diluted things. And everybody played into that Japanese model, especially the Fed, everybody across the planet. So, well, they did it. They got a way that it's working. It's stable. And you can see for many years, just looking at this chart, the yen dipped down a little bit, but it got stronger, but it's just been stable going back to 2017. And so now we're seeing this surge and break out of this consolidation for the Dow or yen. And this is an issue, folks. And they're going to keep selling. I didn't see one story talking about Japanese selling the bonds today. I didn't see one. I don't know. Maybe you folks saw it, but that is what I believe was going on today, in combination with people worrying about what the Fed might do. But that was not the driving force. There was a huge seller in the treasuries that was not there on Friday, and it wasn't evident that they were going to show up, but they showed up big time, and it had everything to do with printing at 134, Dow or yen 134. So keep your eye on this. I told you probably 4 or 5 weeks ago, I talked about this whole scenario. If the Japanese have to defend their currency, this is going to get super, super ugly. And this is why I say the Fed is not controlling the interest rate market, because if these guys sell, and if the Chinese want to just play games and just, you know, they don't necessarily like the Japanese. So if they want to just make prices on the bonds are selling worse, then they have to sell more to try to get the adequate money to buy JGBs and do the other things they're going to have to do to firm up their currency. And I don't think they win this battle. I've been around for a long time. There have been other currency battles, You can go back to the Asian crisis back in the late 90s. You can go back even before that. There was been a lot of issues around currencies. And I remember a time when there was a big defensive going on. The dollar was strong, and no matter what central bank intervened, selling dollars, nothing stopped it. The currency markets are the single largest market out there. So when you start to get this type of momentum, these things tend to go for a while once they break out. You can see, just looking at this chart that I have up here now, going back from 2012 to 2015, so like 3-year move, the dollar yen rallying. Then we went flat. So we could be looking at a couple of years of this, and this may be played out in a big way. Maybe tomorrow night I'll just look at the dollar. If you look at the dollar index, it's mostly heavily weighted against the euro. I believe 30% plus, maybe it's 40% of the dollar index is euro weighted. So it's a little bit different look. This is the best look here, but this has everything to do with the Japanese trying to defend their currency. And this, like I said, I know I've sunk my putt about 3 times, but this is the most significant thing that I'm talking about right now. Needs to be watched very, very closely. I wouldn't do any, I would just stay away from markets in general. You can go in there and bounce in and out and do some day trades or some short-term swing 3-5 day trades if they set up. But I would be very, very cautious. Next market is crude oil. Crude oil continues to remain over 120. I know the XLE got hammered in the last several days. Matter of fact, our ETF hack that I've showed you folks before actually moved to about 40% cash, I believe, as we come into tomorrow on the XLE. So it's starting to take a little bit of power out of those oil stocks that are out there, but I still maintain, as long as we stay over 104, 105, energy is going to be a good sector to be involved in. We're just seeing a lot of short-term sells that are out there right now. Let me just bring that up if I can. Bear with me 1 second here. Yeah, let me bring up our platform portfolio expert. Right here is, I just want to bring up what's happening here. So these are the things that are being sold right now. This might be a little small on your screen, but I'll just, Apache, all the short-term selling, Apache, COP, CVX, EOG, FANG, Hess, MPC, MRO, SLB, and Exxon are all being sold down. That's going to put our projection. Actually, the cash is going from 89 to, I'm sorry, from 10% to 16%. I thought it was bigger than that. So we're seeing some reduction here, and that's going to take a little bit of this thing. Some of the longer term holds are still going to stay on, but this is probably a short-term top. We've seen some of this mountain graph that's over here is the performance since the beginning of the year. We built this in the first week of the year. So this strategy is still up 32% on the year. So it's still done quite well, but we're now starting to pull back some of the cash. But the reason why I bring that up as we cover the oil market is these oil stocks are being sold because they're just to raise money. So there's nothing more going on there than that. The 10-period moving average on, this is the daily, is at 119.51. PPM still positive 0.53, 0.40, 0.50. So on PPM 1, 2, and 3. So these are all positive. So we're not likely to see any major decline. The worst probably that can happen here is going to be possible move back to 115.40 or so. That should be the support level. We'll take a quick look at the weekly. Here's that rising 10. We're still got this 10-period moving average up 2.42. That number right now is at 110.54. So you're going to have major support between 115 and 110. So I think it looks like some of our short-term models are stepping out of some of these stocks and just maintaining some of the intermediate trades that have been on. Some of these trades have been on since November of 2020. And the trends on a longer term basis are pretty big on some of these stocks. But this is set up for a continuation move. Maybe we flatten out here, see some consolidation. 115, 110 is key level there. The next market we'll look at is gold. Gold got hammered yesterday. I talked about this a bit last night, and I talked about it in the live stream earlier today, is that here's another 200 period moving average. There could be easily another $100 on the downside here. This is not a good sign. The only thing that would be positive at all is if we close below 1830 on Friday. I realize, we're coming into Tuesday's trading session. So all week, if we stay below that level, we're probably going to see at least a sideways move for a week or so. But if you look at the PPMs, they're big time. PPM 1, this is weekly chart now, minus 0.67. Everything's rolling over. We've got major resistance at 1880. Look like we're going to try to maybe stay stable and try to print up. I talked about there's just a lot of work until we get above 1880, 1900. That's not going to happen. And so much for inflation hedge with gold. And this is the future. So this is not GLD. This is the actual futures on gold. And the PPMs are just super negative. I'll flash over to the daily for just a second here. We can see daily, not any big extreme on the downside. We did have a cycle come in just a couple of days ago, last Friday to be exact. So we're looking at, actually Thursday was a cycle, looks like a cycle high. PPMs on a short-term basis are just neutral. And looking at today, the grid suggests that S1 1821, the low's been 09, so we're looking S2 1809.70, the low has been 1809.20. So we'll probably find some stability here off of the weakness yesterday, but nothing good here again to look at. Okay, just last night, I talked about going down to the 22,600 level. We're at 21,155. We're down 17% on Bitcoin. This is a full-out collapse. And I had an interesting thought is about Bitcoin. It's so weak. It's crazy how the weakness has come in. But I had this thought, and one of you folks tell me what you think about this, is what if there was some... Who wants to see Bitcoin fail? The government, right? So what if there was a major seller coming in and it was manipulated to knock this thing down and they didn't care about losing money? It would be very interesting anyway. Let me know what you think in the comments. I'd appreciate knowing just what you think. But here's the downward projection. I didn't really think we'd get to these numbers, but here we are. 20,352. This is a daily target zone. Talked about it last night. 15,000, 12,000, 835. I'm going to show you something on the weekly chart that I think is interesting. There's this little spot here, and I've learned to pay attention to these islands that get created by the market. This is actually the Fibonacci price projection. This is down at 9,840. We are now below the 200 week moving average, 22,350. We're trading 21,083, so we're substantially below it. And we could see a continuation of this decline. I mean, this is not even a decline. It's an outright collapse. And it's interesting. Yeah, I hate to come up with a conspiracy theory like that, but if everybody's hodling, who's selling, right? So it's kind of interesting, and you get a lot of folks. There's a lot of leverage in this market. A lot of folks have borrowed money to leverage their Bitcoin investment. There's I think the potential. Binance has got some issues, so rumors are going around the street. All of a sudden, you're seeing these exchanges get in trouble here. And I think our friends in Washington would love to see the cryptocurrency fail. It was a thought I had right before I came live tonight. And I thought, well, you hear this, let's go ahead and, make sure you comment. It's fun in this level here, like being in a live stream, but when it reposts, those comments stick a little better, and you can see them in the comments. So if after this repost, if you have some thoughts on that, if you have a few minutes, I would like to hear what you have to say. But this is big. You got a lot of these crypto guys, man. They have all of the podcasts, and all these guys have lost 100% credibility. They have no credibility. They're just swimming. They're swimming in the blood now. And it's very interesting to watch how this is setting up, whether it's being manipulated or whatever's happening here. There's definitely something very, very big going on. So let's, I'll just finish here tonight, folks. I spent a lot of time on the internet. How much time I got? 46 minutes. I said it was going to be quick. Not true. Anyway, there's just so much going on. So I'll be on tomorrow night. I don't have any intentions, unless there's full out collapse, doing things. I've been known to come up every day. Back in 2020, we were doing live streams, and I was doing videos where they were produced and posted at night. I stopped doing that because this is actually easier. I can come up. It takes me half hour to 45 minutes to prep for these videos, and then just to get through the information. I live and breathe this stuff, so it's not like I have to study everything to figure it out. But anyway, folks, thanks for being part of this channel. Make sure you hit the like button. Let's beat last night. We had 1.2 thousand likes. Let's get that going up. Let's get the algorithms to find out that you guys like what I'm doing here. So appreciate it. Good way to pay me. Just give me a like. I'm free. It's free. So do it. If you haven't done it, do it right now. Anyway, just looking at a couple comments. I'm going to just call it quits here, folks. Thank you again. We'll see you tomorrow night, same time. Trying to get going. It's interesting, breaking the pattern. I try to get on it at 9:30 Eastern time. Been 20 minutes late, just trying to get everything set up. So we'll definitely be around tomorrow night, hopefully right on time, pushing for 9:30 Eastern. Take care. Have a great evening.